What's going on, you guys? My name is Zach Hartley and welcome back to another weekly watch list video. In this series, my goal is to share with you how I feel about the market conditions as well as a couple of companies that are on my watch list going into the week ahead. In this video, we are going to focus on big tech and three of the companies that I think could be presenting a good buying opportunity because I personally believe they are oversold. So in this video, we're going to go through the market conditions and some economic events, and then we're going to dive right into the three stocks. Without any further ado, let's jump right in. Okay, so the first thing I want to point out here is the NASDAQ. As you can see, we're in a long-term bearish trend here, but we have found some support right around 10,000. We broke out of our short-term bearish trend here, but over the last week, we basically dipped back down, and I expect us to test 10,000 again and possibly consolidate around that level. We do not have any clear signs of a positive bullish trend. We're probably going to go into a period of consolidation, and if we fall below 10,000, that's going to be a very strong bearish sign. When it comes to the S&P 500, it's a very similar pattern. We basically bounced off 3,400 here, which was the pre-COVID highs, and so very important level for us. We broke out of our short-term bearish trend here, but we pulled back last week. When we take a look at the Dow Jones here, it is a little bit more positive. We definitely had a much larger rally, and we are definitely bouncing off a key level of support here around 29,500. Again, a key COVID level, but we pulled back last week. We don't have full confirmation, and we haven't really broken above any of our previous highs. So this one right above 34,000 right here, if we can break above that, that's going to be a very bullish and strong confirmation of a bullish trend. Now, when it comes to different sectors and different industries, almost everything is selling off. We're going to talk about tech sell-off today, but a lot of industries are not doing very well. Real estate's not doing very well. Communications are not doing very well. But one of the industries that is doing well is energy. If you look at this chart, it's actually testing 7-year highs that were set back in June here. We are now pretty much at that exact same level here. And if we break out above 93.31, that is going to be a brand new 7-year high, which is very, very exciting. The oil and gas energy industry is doing very well right now, so this could be a place to put some of your money. Now, when it comes to Bitcoin, we've definitely seen a little bit of a rally over the last 2 days. We're now trading above 21,000, which is very nice to see, especially for somebody mining Bitcoin. So very positive sign. We've got some decent volume here. We're also now trading above our moving average, so definitely starting to see some positive signs here. Too early to say that we're in a bullish trend, but starting to see some positive signs. Now, we are still in a big earnings season right now. We had some of the big tech stocks report last week. We got a bunch of more companies reporting this week, including Disney, Palantir, Norwegian, Lyft, Party City, AMC, The Trade Desk, Roblox, Rivian, and Neo. So we got some electric car companies in there. We got Yeti, we got Six Flags, we got a bunch of different companies that are all coming out with earnings this week. So it is going to be a busy week, and it's going to be very exciting to see what happens. Now, when it comes to the market events last week, it was really the US interest rate that was the star of the show. Jerome Powell and the Fed raised interest rates by 0.75% to 3.75% to 4% or 4.25%. They give it to you as a range, but the minimum is 3.75%. That comes in line with where Canada just raised the interest rates to at 3.75%. And the UK last week also raised interest rates by 0.75% now to 3%. And so all three governments are raising rates extremely fast, and I think one of the problems that we're going to see eventually is that rates are going up, and I personally don't think that we have seen the full effect of the higher interest rates yet. What I mean by that is that there's a delay between when interest rates go up and when we actually start to see that effect in the economy. For instance, one of the largest impacts of interest rates is mortgages. In Canada, people renew their mortgage usually every couple of years, even up to 5 years, and in the US, it's even slower. And so the impact of higher interest rates has a delayed and sometimes multiple year delay on its impact on people's lives and the economy. And so it is something to definitely consider because as of recently, this rate has gone up extremely fast. In March of 2020, we were at 0 to 0.25%, and then we went all the way up, and actually just the last few months is where we really saw the dramatic increase from 1.5 to 3.75, and before that we just saw a couple of small increases, but this is going up pretty quick, and it's going to have a major impact. And what I'm hoping for is that it's not a whiplash effect, but it is something to consider and possibly something to trade as well. Now, when it comes to managing high interest rates, here's what goes through my head. Number one is if you have a mortgage payment, you need to understand what that mortgage payment is going to turn into if you have to refinance. Make sure you're prepared for that. And if you're not prepared for that, maybe you need to come up with another plan. But if you have a mortgage, you really need to just understand how that mortgage works, what your monthly payments are going to be. Also, if you have high interest debt, that needs to get paid down right away because the cost to borrow is going to go up. You don't want to be borrowing a bunch of money in the future here if it's going to be at high interest rates. Now, in general here, if you have cash and you're worried about inflation, you should be buying assets that generate cash flow, such as dividend-paying stocks, bonds, GICs, or REITs. You can currently get like a 4% GIC, which is actually really, really good. REITs are paying a couple of percent higher than that. You can get some dividend stocks that are paying 5, 6, 7% right now, and you can buy bonds at 2 or 3%. So you can make some residual and passive income here, and you can basically maintain that wealth by buying assets that generate the cash flow. And lastly, and what we're going to talk about mostly in this video, is that during these kind of market conditions, I think there's a lot of companies that start to become oversold, meaning that they decrease too much in price. And I personally think that there's value there. And so I'm going to come in and scoop some of them up. We're going to talk about 3 of them right now. Okay, so the first one here is Google. Google is one of my favorite companies. I make videos on YouTube, but I also use Google for search. I use Google in my home for all my Google speakers. I use Google for a lot of things, and they control a lot of different businesses. I don't think they're going anywhere. I think they're going to grow over time, and I do think they have a strategic advantage. They're also a growing company. They're profitable, and they are currently selling at a price to earnings multiple of 16, which, as far as I am considered, for a company with this kind of growth, that is a massive discount. They're significantly undervalued, and I don't think that Google is going to decrease revenue anytime soon. I think it might slow. Maybe they're starting to kind of curtail a little bit, but I think this company is still going to grow immensely, especially when they start to develop more and more hardware and the software continues to get better. I just think they have a great business model. They're not going anywhere, and they have a stronghold with a great strategic advantage. And as you can see, we've come down to these pre-COVID levels right here at 76 and 85. And these are crucial levels for us because as you zoom in, Google is very clearly reacting to key levels of support and resistance. First one at 125, we bounced off this level 4 times. Then at 105, we bounced off this level 4 times as well, and we got rejected at 124 when we came up. That support then became resistance right here in August, and now we have fallen through support. That same level has acted as resistance again, and now we've come back down to the next key level at $85. I think we could see a bounce either at $85 or at $75. If it goes down to 75, I'm going to be buying a lot of it. If it goes to 85 and starts to bounce, I do think it's a good entry. I just think Google at a price to earnings ratio of 16, like you just can't go wrong with it because it's a company that's still growing, that's already profitable, and that has a strategic advantage. Next one here is Amazon. Amazon kind of falls into this category as well. Their stock chart is a little bit similar. They're coming back down to these pre-COVID levels. They're already lower than where they were at before COVID, so that's one thing to consider. They are a growing, profitable company, and as of right now, they have a price to sales ratio of 1.2, meaning that their market cap is only just slightly larger than the amount of annual revenue that they bring in each year. Now, Amazon does not have great margins on some of the products that they sell and some of the services that they offer, but on other products they have fantastic margins. And so it's a really interesting and dynamic company that personally I like the business model, and I think they have a strategic advantage, and they've already accumulated so many assets that this company, in my opinion, is there for all the right trends. They're there for e-commerce, they're there for the Internet of Things, they're there for home automation, they're there for storage in the cloud. Like everything that this company does, I think, is in a trend that is going to grow over the next 5 to 10 years, so I like it. Now to get into Amazon, if you don't own any shares yet, key level right here is $100. We bounced off $100 a couple of times, came up to $140, and now we have fallen below $100, currently trading at about $90 right now, and I think it's going to come down to this $80 level here. I don't think we're going to stay at 90. I think we're probably going to test 80, and at that level we should find some support, because if you go back a little ways, this $80 level is exactly where we found support in April of 2020. And so I do think there's a good opportunity here with Amazon. I think it's selling at a reasonable price, and it's basically 2 years later, and the company's selling for what it was before COVID. Amazon has only gotten better throughout COVID. We've only become more reliant on Amazon, and the company is only making more money. So I like Amazon at these prices. I think it's a good buy. Now, I am personally doing all of my charts here. As you can see, I'm doing my technical analysis, and I also do all my trading on these charts. And these charts come from Questrade. That's the broker that I use for all of my day trading and investing. If you're interested, there's a link in the description to this video that will give you $50 in free commissions with Questrade. So if you want to try it out, completely risk-free, make a couple of trades, and just see if you like it, use my link, use my code, open an account, fund the account, make a couple of trades, and you won't pay a single dollar in commission. You can sell your money and take it out at the end. It doesn't matter at all. At least you gave it a shot and it didn't cost you anything. So if you want to check that out, link is down below. But the last company I want to talk about in this video here is Tesla. Now, Tesla is really interesting because holy cow, this company is volatile. I personally think $200 is a very key level here, but it also has an all-time high of $414. So as of right now, Tesla is down by over 100%, which is just, well, actually 99.99%, which is or 49.99%, which is just absolutely crazy. I mean, we're currently trading on a key level here, and so this is what has got me interested, because if you look at 200 here, we bounced off it in basically February or March of 2021, again in April 2021, again in April 2022, and now again right now in October 2022. And so what I am watching for is a strong breakout of $200. Whether it's to the downside, then I would go short on Tesla. I personally don't think that's going to happen. I think over the long term, Tesla is going to do pretty good. Or if we see Tesla bounce off of 200 and then start to set new highs, that's going to be the confirmation of a bullish trend, and that's probably going to be my entry point into the stock. I like the company. I really like the robot that they unveiled. I think in a couple of years' time, that's probably going to be the #1 product. I'm really excited to see how the semi-trucks do in the next few months here, and I really want a Cybertruck to get delivered, so that'd be really nice. So I'm bullish long-term on Tesla. I'm actually quite concerned about Elon's attention right now between SpaceX and Twitter and the Boring Company, and then Tesla. He's got a lot on his plate right now, and it feels like he's the key to success. So hopefully Tesla is still the #1 priority, but it's going to be really interesting to see what plays out. It's that $200 level though that I'm either watching for a bounce off of to break out with new highs, or if we fall below 200, I personally think that's going to be a bearish indication. And especially if things start to go bad at Twitter and SpaceX has one problem or two problems, let's say, then I think Elon could be wearing thin with regards to how much he can do, and that could have a negative impact on Tesla. So it could go both ways. Now, if you got any value out of this video, thank you so much for watching to the end. There's no pitch here. There's no sale about my course. Please just consider hitting that like and subscribe button. I sincerely appreciate it. The link for Questrade is down below, but that's it. We'll talk to you later. Thank you so much for watching, and we'll see you next week.